This was a correction that probably won't last, but that was overdue. What are your thoughts today? Are we going to get 3% on treasuries or not?
Well, I mean, we're very close to that anyway, and whether it's, I think 290.97, I think was the...
290.27 right now.
Yeah, so, the broader point, I think, is what we've seen is at the beginning of the year was a relentless move in one direction, which was equities were going up, bond yields were going up nevertheless, and everything was going in that direction. Yeah. I think that has paused for now. The volatility might have some very specific origins, but, it doesn't matter. I think the bigger theme is that that super Goldilocks scenario they had before, that's over for now. But the economy is still very robust. It keeps growing. We certainly think it will. And that probably means that this strong correction that we've seen is not going to turn into a major equity bear market, and therefore everything comes unraveling. That's very unlikely. So we have a correction. It's probably going to last for a while, but it is a correction nevertheless.
OK, what happens to credit in this? We were concerned that it would infect quite violently the credit markets. That hasn't happened.
Well, I mean, it has happened to a small degree when you look at, particularly some of the higher yielding credit spreads. They have widened to some degree, but overall, and again, I think it's very important to sort of keep perspective here and to not get thrown overboard. Overall, funding costs for corporates on pretty much all credit levels still are very, very low, and that's the most important bit. They have corrected to the upside, but overall, they're still relatively low.